joining me to talk about just that is Sushil Choksey, the Chief Executive Officer of Indus Equity Advisors. Thank you so much, Mr. Choksey, for taking the time. The first question, of course, I think on quite a few people's minds, especially those tuning in, is what's driving this recent run-up of just about 7.5% or so this month itself?
Good morning, Alex, and thanks for having me on the show. Basically, Reliance demerger, that is Jio Financial's book closure, which was announced for 20th of July, has led to the spike in the price because a lot of retail and institutional investors, depending on the choice, who would like to own a piece of Jio Financials. And it's also a preempt to that how will Reliance Retail and the telecom arm Jio will live overall on a long-term basis. Whether it will happen with this AGM, it may take 1 year, 12 months, 24 months, one doesn't know. All the speculation continues, but currently the run-up started out of the consolidation phase, which Reliance was hovering in last 1 year between 23 and 26, 2700 towards this new benchmark, was primarily driven by the book closure date, which Reliance announced. And particularly as the markets have moved up, led by many stocks, the index at the current level, a lot of proxy is being sought by many participants in large cap. So the next 2 year, 3 year with election out, likely next year, central and state election coming, people are moving after mid cap rally also into some of the large cap, and Reliance being a proxy. But the predominant benefit came because of the demerger of Jio Financial Services.
Okay, so that kind of puts things into context. Because if I look at the outlook for the current, for the first quarter, Mr. Choksey, I think consensus is that it's not going to be a very strong quarter for this group. What are your own readings on what could be the print or the key metrics to watch out on in the first quarter?
See, Alex, when you're buying a large cap like this, barring few traders who want to trade on a monthly, daily, weekly basis, they look at this result. But if you look at a consolidated EPS, which is forecasted for FY24 and 25, so let's break up how it. Oil to chemical is likely to be weak. Reliance Retail and Jio is likely to be doing well. Jio Financial is getting demerged. The valuation given to the stock with treasury stock being transferred there, plus the current net worth, add to it, it comes to anywhere between 180, 175 rupees. Now, who will give a holding company structure discount to the Reliance shares owned by them and people who will not? And if you look at the pure net worth basis, will you price that at 2 times book or 3 times book? It depends on. So basically, let's assume that 175 to 200 is a fair value based on what the global reports are indicating. Reliance Retail, people saw that current buyback which they are doing from retail shareholders at 1362 rupees a share. But everybody looks at how Reliance Retail is going to pan out over a number of years with e-commerce, luxury, and all other kind of formats and expansion which is prevailing right now. So if all those kind of expansions have to be factored in, retail has been provided a higher PE. So people are looking, if I as a shareholder want retail separately, telecom separate, I want to be only in oil and gas, oil to chemical. So depending on the structure, you'll have to look at it. So the breakup of Reliance right now, it seems that oil to chemical is anywhere between 750 to 800 rupees, and oil to gas, which is the current KG basin find, may be a big kicker to support that entire piece because of gas supply, which is going to increase to a sizable amount. And I think commercial production was announced on 29th, 30th of June. Now, after that, if you look at retail, 1000 to 1200, depending which report you read to. Jio has a similar range, again, around 1800 to 1200, depending on how you factor in. So sum of parts, everybody is valuing between 2800 to 3200 rupees a share. But the future is brighter because alternative, the new energy business led by hydrogen and solar. And keep in mind, barring 2 large groups, everybody is dependent on raw materials from China, whereas Reliance and the other groups are looking at polysilicon integrated, because nobody in India, China controls 95% of polysilicon. So everybody is gung-ho about solar, but there's no value integration done from basic raw material to finished products. So Reliance is looking at integrating the entire solar chain, and that would be linked to hydrogen. So people have started talking about that value. And if you take a 10-year outlook on that business is a different thing. And if you take a 1-year outlook, is different. So if you break up all these sum of parts, I think at 27.50 and you have a 3-year outlook, the stock makes very attractive, and people who are playing for demerger can happen in 12 months, 24 months, and the breakup will have. So if you're looking at compounding with a 3 to 5 year outlook, Reliance remains attractive, and that's the basic story, and not dependent on quarter earning. But anyway, the earning for this year would be approximately 140 rupees EPS, and profit before depreciation, interest and tax before the demerger consolidation basis was being estimated at 1,65,000 to 1,75,000 crores.
Mr. Choksey, you know what I'm going to do after this conversation is done? I'm going to cut this portion out and put it out separately so that people can listen to it, because you've answered so many questions that I did not even have to ask. So thank you so much for taking the time this morning. And I think that part of where you talked about the sum of the parts valuation, also the potential over the next 3 to 5 years, kind of answers what the various analysts are also putting out, because I see the consensus estimates pointing to a growth of or a potential of 2.8% upside from this point. But even that, there is quite a divergence, with one particular brokerage saying that there's a 17% upside from this point. So I think that will also pan out over the course of the coming weeks and months. But thanks, as always, for taking the time. Pleasure.
I'll just put in one word here.
Yeah.
The diesel exports which Reliance would have managed to Europe in this quarter may surprise a lot of people where refining margins are concerned. So I'm not saying looking at Singapore GRM, they are going to be bad, domestic consumption. But if Indian economy is going to go from current 3 trillion to 5 trillion and 10 trillion, and the outlook on domestic consumption on petrol is doing well, and if oil is stable at 75-80, the local retailing, what happens, one doesn't know. And as inflation in India tapers off over a period, right now we are in a little inflationary led by vegetable and supply chain disruption. I think interest rates have peaked, and if consumption kicks off, all the verticals which are more a consumer play where Reliance is concerned will have a benefit, because whether it's petrochemical led by plastic or oil and gas or everything, it's a consumer connected product.
Yeah.
Similar ways telephone, and similar ways entertainment, and similar ways retail. And keep in mind, there are reports which are indicating that hydrogen solar combination can be a 10-bagger if you have a 10-year outlook. One only needs to wait and see what Reliance achieves compared to many Chinese or some big global companies. But I am quite optimistic where manufacturing is concerned, Reliance normally does well.